Welcome to Tax Tuesday. My name is Roderick Robeson. I'm a Texas Certified Public Accountant. And for this Tax Tuesday, we're going to talk about the Economic Injury Disaster Loan compliance requirements. Now, we're not going to talk about all of them, but what I wanted to do for this episode was kind of highlight some of the things that are required in order to be in compliance with this loan. And one of the reasons why I want to do that is I've talked to a lot of small business owners that just hadn't really read the loan agreements, or they don't understand some of the use of proceeds requirements. Also, the payments for the EIDL loans are starting to become due now. They generally start 1 year after you sign the loan agreement. And so what I'm going to do now is go through the agreement. Now, this review is for educational purposes only. If you want the legal ramifications regarding the loan, then you'll need to talk to an attorney to give you legal advice related to the loan. But for this episode, I just want to highlight some things in that agreement that you should focus on, really read and get a good understanding on it, because it could get you into some trouble if you do not understand the terms, if you do not understand the language and the requirements for this loan. So let's dive into it right now. Here is an EIDL loan agreement. It's an agreement from one of my clients. We've stripped all of their information to protect the identity, but I wanted you to see the actual agreement and not a sample. And what you will notice right away in big letters is that you must carefully read this entire agreement. And then right below that is you must comply with all of the terms and conditions of this agreement. And the only way you can comply with all is you need to know all of the terms and conditions, and you need to understand them. So read the entire agreement. Anything that you don't understand, you're confused on, get legal counsel to help you understand. You may be saying, well, I've already signed it and started using the proceeds. I'm done. Not so fast. What getting good professional counsel will do is help reverse, in some cases, and mitigate in others the impact of any non-compliance. So get legal counsel if you do not understand anything in the agreement. If for some reason you can't afford legal counsel, there are free resources. You can go to the Small Business Administration and the Small Business Development Resource Centers, and they can help you. Our tax dollars pay for these resources. And every state in the country, if not every major city, has a small business development center through the SBA. So take advantage of that resource if you cannot afford legal counsel. Another resource is SCORE. SCORE is a nonprofit organization that is comprised of volunteers. The volunteers are traditionally business executives that are retired, successful business owners that just want to help small businesses grow and thrive. And so these are two free resources that you can take advantage of to help you to understand the loan agreement. And in addition to that, they're just good business resources. When I started my first business, I went to SCORE and I got advice from a business owner that I still use in every business I've had today. So it's a really good resource. Take advantage of it. So payments are coming due very soon. The payments are generally due 12 months after the date the loan is signed, which is the effective date of the loan. You should have received via email an email that looks something like this, and it has a service letter attached. And in that service letter, it's the way for you to activate your account with the SBA so that you can make payments. And so you want to make sure you do that as soon as possible. Get that information, log into the website, get activated, put in your payment information. But also there are other resources in that website, and notices related to your loan are in that website. Now, this is COVID, and this is an email, and people like to use phishing to steal people's identity. So just be careful when you're opening emails with attachments. People are going to take advantage and send emails that look like this to try to steal your information. So just be careful. All right, collateral. What does this section mean to me? To me, it basically means the SBA owns your business. they have a first lien position on all of the assets. That's their collateral. And so you can't sell anything without the SBA's permission. It's harder to get financing because the SBA has a first lien position on all of your company assets. They own your business. That's what this means to me. Here is where most people get in trouble: use of loan proceeds. So remember, this loan has a very specific use. The Economic Injury Disaster Loan predates the CARES Act, which created the PPP loan, and it predates COVID. The Economic Injury Disaster Loan Program was traditionally used, or is traditionally used, for situations like hurricanes, Hurricane Katrina, wildfires in California, tornadoes that have gone through communities and just destroyed the communities. Well, how do those people who own businesses, how do their businesses survive? Because there's no economy anymore because of these things have gone in and just wiped everything out. That's what this loan is for. It's to give businesses that have been injured this way funds to keep their business afloat. So the money is not to be used for scaling your business, expanding your business, buying real estate. That's not the purpose of these funds. It's just a stopgap to stop the bleeding. And so that should, with that in mind, that should help you to be able to understand what you can use the funds for. And those uses are called working capital. So that's rent for your business, that's utilities for your business. If you do not have a PPP loan, you can use the money to pay for salaries. That's the purpose of these funds. And I've heard of people wanting to do real estate investing and buy large pieces of equipment. And it's like, that's how you get in trouble. That's not what the funds are for. The funds are for working capital. They're to float you through the business. Well, how do you prove that you use the funds appropriately? Well, the way you're going to do that is with receipts. So the SBA is going to want you to keep a receipt for every single dollar that you use the proceeds for. They're going to want to know, what did you use it for? Because if you used it for something outside of the scope of its use, that's in violation of the agreement. And you need to keep the receipts for up to 3 years. My advice is get a fireproof safe, scan every receipt related to the loan proceeds, save those receipts in that fireproof safe, and now you have 2 places where you can keep the evidence. If you could, it may be too late for this, but have a separate bank account where those funds were. And then when it's time to buy things for those funds, then you buy it out of that, you use it out of that bank account. And so now you have an accounting system basically where if the SBA wants to come and look, you just show them that bank account. Here's the bank account, and that bank account has everything we use the funds for. And they don't need to look at any other bank accounts. They can look at that one account and you're good. Now, it may be too late for some of you this late in the game, but if you did that, great. That would be the most ideal situation. But if you didn't, every single receipt that you use the funds for, you need to scan it, put it in the cloud. You need to save it in a fireproof safe and be ready for an audit. Here's another clause people miss. There is a requirement to buy America first. So if you have 2 choices on something you can buy, and one of the options is an American-made product, and the 2 items are exactly the same, you're supposed to buy American-made first. You're supposed to buy an American product, not another product. And a lot of people miss that. Insurance, you got to have it. What type do you have to have? It's hazard insurance. It's insurance to cover the assets. Think about it this way. If you buy a brand new car and you finance it, the bank's going to require you to have comprehensive insurance. Why do they do that? Because if you total that car before you pay it off, they want to be reimbursed. That's all this really is. Take this contract to your insurance agent. Say, hey, look, I got the EIDL loan. Here's what the agreement says. And have them give you the appropriate level of insurance to make sure you comply with the loan. Here's another big one that most people don't know about or understand. The SBA can ask to see your financial statements. They say, look, we want to see your books. We want access to them. Because they own your business, remember? It's just like another bank. When you borrow from a bank, they can ask for financial statements to make sure that you're able to pay. And it gets even better. You have to submit financial statements every year to the SBA. And they're going to take a look at them. And if for some reason they don't like what they see or they don't think they're accurate, what the SBA can do is say, you know what? We know you complied and gave us your financial statements. We don't like your financial statements. You need to go pay a CPA to review your financial statements. And that CPA is going to issue a report. And then we're going to take what the CPA says and not what you say happened in your business. And this is a requirement. They can do it whenever they want. So if you do not have an accountant, bookkeeper, or someone that is creating clean financial statements for you, and you have this loan, now is the time to hire someone to do that. We've talked about this a little earlier, distribution of assets. You can't just sell whatever you want out of the business anymore. You got to get the SBA's permission to do that because they are now your pseudo partner. That also goes for taking distributions out for yourself. You got to be careful when you do that, because again, the SBA is trying to make sure it's getting repaid and that the funds are not being used for things outside of the scope of the purpose of this program that was created by the government to help people. And last but not least, what happens if you violate the terms of this agreement? There can be civil and criminal penalties, and they put that right in the loan agreement. So they want to make sure you know that if you violate the terms of this agreement, they are going to come after you. And here is the legal justification for doing that. So it is very important. This is not like a regular loan. This is not free money. And I know when this first started, people panicked, were afraid. Some people saw this as an opportunity. You have to understand this is government money through a government program, and all eyes are on it. And this clause and this program has existed much longer. And so the law around this is pretty much solid. So you want to read the agreement, you want to comply. If you don't understand how to comply, you want to get help on how to comply to protect yourself from inadvertently violating the agreement. So that's going to end it for this Tax Tuesday. If you have any questions about this video or anything, you can always email me at info@rorcpa.com, and I'm more than happy to answer your questions.